Imagine waking up to a notification on your phone. You haven't worked an extra hour, you haven't sold a single product, yet your bank account balance has just gone up. This isn't magic, and it certainly isn't a get-rich-quick scheme. It is the quiet, powerful engine of dividend investing. For many, the stock market feels like a casino, a place of stress, charts, and noise. But there is a different way to play the game, a way where you don't trade your time for money, but instead, your money buys you freedom. Welcome to the Wealth Up Hub, where visionary mindsets turn into real wealth actions. Your future self thanks you. To understand this strategy, we first need to demystify what a dividend actually is. When you buy a share of a company, let's say Microsoft, you aren't just buying a digital ticker symbol. You are buying partial ownership of a real business. When that business makes a profit and has more cash than it needs for operations, it often decides to share that success with its owners. That's you. They send a portion of those profits directly to your account. It's essentially a thank you check for being a partner. Now, you might be thinking, I don't have the time to research hundreds of companies to find the best ones. You are absolutely right, and you shouldn't have to. This is where the power of dividend ETFs comes in. Instead of hunting for a needle in a haystack, you buy the whole haystack. ETFs like SCHD or VYM bundle hundreds of strong dividend-paying companies into a single basket. By owning just one share of an ETF, you instantly own a slice of banking giants, consumer staples, and energy titans. It is diversification on autopilot. The beauty of this system lies in its passivity. These funds typically pay out every quarter, 4 times a year. Imagine planting a tree that drops fruit every 3 months without you having to water it daily. But before you dive in, you need to understand the calendar of wealth. There are 3 critical dates to watch. First is the declaration date, when the company announces a payout is coming. Second, and most crucially, is the ex-dividend date. Think of this as the cutoff. You must own the stock before this date to get paid. If you buy on or after this date, the money goes to the previous owner. Finally, there is the payment date, the day the cash actually hits your account. A word of caution, when you look at these investments, you will see a percentage called the yield. It's tempting to chase the highest number. You might see a company offering a massive 20% or 30% yield and think you've struck gold. Be careful. In the world of dividends, if it looks too good to be true, it is a red flag. Extremely high yields often signal a company in trouble, desperate for investors before they cut the payout entirely. Stick to the steady, boring growers. Sustainable wealth is rarely flashy. It is consistent. The goal here isn't overnight millions. It's about building a snowball. You start small, maybe investing a few $100s a month. At first, the dividend checks are small, enough for a coffee. But if you reinvest those checks, buying more shares, the snowball rolls down the hill. Over 10, 20, or 30 years, that small snowball becomes an avalanche of passive income that can eventually cover your rent, your bills, and your life. Let's recap the roadmap to living off dividends. Ownership. Mindset. Remember that buying stocks means owning real businesses that share their profits with you. The power of ETFs. Use funds like SCHD or VYM to automate diversification and minimize risk. Watch the calendar. Know your ex-dividend date so you never miss a payout. Avoid yield traps. Don't chase suspiciously high yields. Consistency beats intensity. The compounding effect. Reinvest your dividends to turn small payouts into a full-time income over the long term. Remember, fortune may come from things beyond our control, but what is in our control is the action we take today. So if you found this video helpful, don't forget to like, subscribe, and share. Because like and subscribe are in your hands. Thanks for watching. I'll see you in the next one. The Wealth Up Hub, level up your wealth.